Welcome to the chart. Welcome to the chart. Trading carries risk and we are not responsible for your profits or losses. So right here in the market mechanics, the weekly outlook, we look out for zones that have the best opportunities to buy or sell, and we look out for only strong zones, and zones that are not strong we ignore. As we know, support and resistance, these are very vital zones in the market, and these are the exact zones that we look out for in the market mechanics. On the weekly market outlook, we are looking out for these zones to be taken out, and if they are taken out in a manner where all rules are met, then we know that price is going exactly as predicted. In the market, nothing is cast in stone, and all analyses are nothing but a perspective of the operator analyzing the chart. So for the sake of beginners, let us take less than a minute to explain candlesticks and what we have right here in front of us. As you can see, price rallying up, creating series of higher highs, lower highs and higher highs with a cluster of green candles. These green candles, they signify what? They signify buying pressure. While as you can see, price rallying here and ranging with a cluster of white candles. These white candles, they signify selling pressure. While a candle that is neither green nor white like this candle, it signifies indecision in the market. So the first rule we need to keep in mind, if you followed our analysis last week, USD played out exactly. We expected price to grab liquidity right here, which it did, and create a stronger resistance. However, for this week, we are going to be ignoring this pair because at the support, let us reverse back to explain what support and resistance means for beginners. Support and resistance, these are sensitive zones in the price chart where we have the most aggressive buyers and sellers that are ready to buy a currency up or sell a currency down. So where do we have these zones? We have these zones at the swing highs or lows. This is a swing low, this is a swing high. We have them at daily highs or lows. This is a daily high, this is a daily low. And we have them at where? And we have them at weekly highs and lows. This is a weekly high marked in this red line. This is a weekly low marked in this red line. This is a weekly high. We have them in monthly highs and lows. This is a monthly high here. This is a monthly low. And we have them in quarterly highs and lows. That is the highs and lows of the last 3 months. We have it here. The high here, we have the low here. Let me mark it in a red line so you follow along well. This red line right here, this is the high, this is the quarterly high. That's the last 3 months. That's the high that price made there. And you can see this month too, we're in the 3rd month, and last 3 months too, this is the low. So we also have them in the yearly high and low, and so on. However, for the sake of clarity, the best time frame to look out for is the 4 hours. You can also use the daily, but in my opinion, I prefer the 4 hours as it gives room for clarity, and we have 6 candles that make up a day on the 4-hour chart. So now at these zones, we look out for reversals, because mind you, we have the strongest buyers in the low here, we have the strongest sellers at the top here. And you need to keep something in mind, that these buyers here are very aggressive and they are rigid and they are stubborn. These sellers here, they are aggressive, they are rigid and they are stubborn. So we can conclude that both of these parties, whenever price reaches this zone, they will try as much as possible to make price push further down. Likewise, this party, if price gets to this zone, they will try as much as possible to make their money push this price up. So for these reasons, we anticipate price to drive to these zones and price to bounce up. Likewise, we anticipate price to drive to this zone and for price to rally down. However, there are rules to be met to conclude if price is going to rally down or if price is going to bounce up. So firstly, at these zones, what do we expect? Right here at the bottom of the low of the week, we expect a sell candle, and on USD that is not present. At the top, we expect a buy candle. Why do you expect a sell candle at the bottom, and why do you expect a buy candle at the top? The reason being is the fact that once we have a sell candle at the bottom, then we can conclude that the trend really is in a downtrend, and the buyers here are in peril, they are in danger. Likewise, at the top here, we can confirm that the trend is in an uptrend, and if you have a buy candle there, then it means that the sellers there are in danger. And what you always want to see is the buyers in danger and the sellers in danger. So if you are not seeing a sell candle right at the resistance, that's the bottom, then the sellers are not much in a danger. Likewise, if you do not see a buy candle at the topmost, then the buyers are not in danger. So now let's just move to pairs where probably we are going to have the buy candle at the resistance at the top and the sell candle at the support. So pairs that do not have the sell candle at the bottom, you can see on AUD the same. We also ignore this. USD, yes, at the bottom you can see not the sell candle, but at the top you can see a buy candle. So now this denotes that the sellers are in danger. So for this reason, at the opening of the week, we can expect price to consolidate, rally up, retest these zones. Likely that is if we have a strong resistance, however no strong resistance for price to bounce down. So expect price to take out this zone. So now the next question that should come to mind is, why do we need price to take out this zone? We expect price to take out this zone because once a resistance is broken, the sellers are going to try to form stronger resistance. So now if this zone is broken, we are going to have new sellers introduced into the market that will attempt to push price down. However, price must only break this zone with no more than 2 close of candles. So we have to have just 1 close, 2 close. So if we have 3 close of candles, then the zone is invalidated. For instance, we can see last week right here, it was taken out, and you can see 1 close, 2 close. Although we had 3 close, but we should have had just 2 close. But you can see price reversed. Let us take examples to see zones where price behaved as expected. However, the rule is not cast in stone that once price breaks the zone, it must reverse 100%, but it is likely to. So right here we can see this particular week we predicted this. So what happened? We had a consolidation, market took out, because right here we had the sellers in danger. There is a buy candle here, and price took out this zone. But what happened? New sellers were introduced and price pushed down. So these are exactly the patterns we are looking out for to expect a reversal on a pair and to anticipate the direction which a pair is going to move. Right here we can see a sell candle here, and right here the buyers were in danger. And what happened? When price broke, we have just 1 close, 2 close, and price reversed. So back to the business of the day. So that is what we're expecting on Euro USD. On USD CHF, you can see at the support we have a buy candle right here, which invalidates us looking out for this pair. But right here you can see a buy candle, which means our sellers are in danger. So what do we expect? We expect that once price opens, let us zoom in. We expect that once price opens, we expect a consolidation around this range and for this high to be taken out. And once this high is taken out with not more than 2 candles closing above, then we expect a reversal to the downside if all rules are met. However, if price rallies down here, we expect the market to do whatever it wants. On AUD USD, we can see the sellers in danger right here with a buy candle here. So we expect price to consolidate, take out this high and give a reversal to the downside if no more than 2 candles close above and all rules are met. So since we do not have a sell candle at the support, we invalidate this pair. So right here on GBP/USD, we have the perfect pair to look out for, as you have buyers in this zone denoting that the sellers in danger, and we have sellers in this zone denoting that the buyers are in danger. So once the wicks open, we expect price to consolidate, take out this low, and give a reversal to the upside if new buyers are introduced with not more than 2 candles closing below this support. Nevertheless, if price does the opposite and rallies up here, takes out this high with no more than 2 candles closing up above and all rules are met, forming a pattern for a sell, then we can expect price to drop. On NZD/USD, you can see we have the sellers at the top and we have the buyers at the bottom. So right here, we do not look out for this pair because the sellers at the top here, this means that the sellers are not in danger, and the buyers right here at support, it means that the buyers are not in danger. So right here we can see the buyers at the bottom, the buyers are not in a danger, and we can see a doji candle and indecision candle, so we do not look out for this pair. So right here on USD card, you can see the buyers are in danger with a sell candle below, and at the top you can see a buy candle, so the sellers are also in danger. So once the market opens, we can expect a consolidation for this high to be taken out for a reversal to the downside with no more than 2 candles closing up above and if all rules are met. However, if reverse is the case, we can expect price to come to this fair value gap and these zones here to bounce back up, as we have lots of money sitting down here. Why we have lots of money sitting down here is that this is a fair value gap, and a fair value gap is a zone in the market where there is minimal to no trading in between price, and we can see right here price just jumped up. So right here there is a lot of orders waiting to be filled by the institutions. So if price comes to this zone, just mark this zone. In fact, this is a pattern, this is a structure pattern for entry. If price comes to this zone right here, we can expect price to bounce up, and if price breaks it, we can expect price to come down here and do whatever it wants. On gold, do this analysis on your own. However, we don't even look out for this because we don't have good zones. The sellers are not in danger, the buyers are not in danger. Right here you can see the buyers are in danger, but the sellers are not in danger. So on silver, we can expect price to consolidate, take out this low with no more than 2 candles closing, and a reversal to the upside for gold to continue to fly higher. Right here we do not have either in danger. Right here we can see the sellers are in danger, so we expect price to open, take out this high and give a reversal with not more than 2 candles closing above if all rules are met. So those are the reversals, because the style we use to analyze the chart is a contrarian style. On BTC/USD, I already analyzed this last night, but so right here we can see the sellers in danger, so we expect this high to be taken out and reversal to the downside, and at the bottom here we do not have the buyers in danger. So right here, this is a good one, as you have the sellers in danger on DXY. So once the market opens on DXY, we can expect price to consolidate to take out this low and reversal up if no more than 2 candles closes below. So plan your trade your plan, and most importantly, manage your risk and emotions. Mind you, this trading style of analysis is a contrarian style. You always attempt to make a counter trend. The trend is your friend, however the beginning of the trend is your best friend, and we always try to catch the beginning of the trend. If you find this useful, like, subscribe, share and follow for more.